This video is based on the technical analysis of Filecoin, and at this point we're on the monthly chart. In the analysis, what we'll do is identify the market structure of Filecoin, market patterns, key support and resistance levels, important candlestick patterns, as well as levels at which we should be looking for those potential buying and selling opportunities. So let's get into the actual technical analysis. On the monthly chart, we can see that the market had given us this huge head and shoulders pattern, and it started at this point, and we can see that it ended at that point in line with where it started. So this tells us that this huge head and shoulders pattern is no longer relevant, and that is because the structure played itself out as it started, as I said, at this point and has ended at that point. So what this is telling us also is that we are getting ready for a reversal, and I believe that in the future we will likely see the market move further up to around this level over here. Why do I say that level? That is because at that level we have this candlestick over here, and what it is a bullish candlestick which has quite a small body and a long upper wick. And what that tells us is that at the top where that wick ends, we actually have a lot of liquidity stuck there. And as you guys know by now, liquidity is actually money that needs to be triggered by the market at one point or another. And we also know that the market will always go to where the liquidity is, right? So I'm saying, in other words, that we should be preparing ourselves to see the market move further up, right? Anyway, what else do we see in regards to the monthly chart? At this point, I don't see much, so what I will do is head down to the weekly chart, and here we are on the weekly chart. What do we see on the weekly chart? On the weekly chart, we can see that the market had actually given us what is this M structure over here, and it's actually an overextended M structure, as that first leg is much higher than the second leg. And you guys know that whenever we have these structures such as the M structure, we want to see price breaking to the bottom side of that neckline, and then in the future heading back to the neckline to just test it. And generally speaking, where we have that neckline is where we look for those potential selling opportunities, especially if the neckline, which is over here, aligns with any key numbers that we have in regards to the Fibonacci retracement tool. And if you were to utilize the Fibonacci retracement tool, you would see that the neckline of this huge M structure actually aligns with the 61.8% Fibonacci retracement tool, right? So as I said, guys, we have this M structure. Price broke to the bottom side over here, and in the future we saw the market will price it back up to the neckline to create test again, and at that point is where we should have looked for those potential selling opportunities, right? And in my very, very humble opinion, I believe that we should still be looking for those selling opportunities at this point in time, and that is because, guys, we have this M structure which has a neckline at that point, and this particular M structure actually started at this point, and ideally we want to see the market end more or less at that point in line with where it started, right? Anyway, from here what I'm going to do is head down to the daily chart. However, before I do so, I just also want to point out that we have this candlestick as well, and it's also very much similar to that candlestick that we spoke about on the monthly chart, in that it too is a liquidity candlestick that's carrying a lot of money at that level. And as I said, guys, we will see the market move further up to this level to grab that liquidity at one point or another. Anyway, let's head down to the daily chart, and here we are on the daily chart. And just to recap, guys, remember on the weekly chart I spoke about how we have this huge M structure over here which has a neckline at that point, and I said to you guys that we saw price actually at this level over here breaking to the bottom side of that neckline, going back to the neckline to give it a test, and I said at that point is where we should have looked for those potential selling opportunities, right? I also said that if I can just zoom out a bit, because the structure actually, in my very, very humble opinion, started at this point, went up, gave us this M structure. Ideally you want to see it end at that level in line with more or less where it started. But what's happening on the daily chart? Let's just zoom in and see what's happening, right? As much as, guys, I said on the weekly chart we have this huge M structure with a neckline at that point, right? I hope you guys can also see that at this point in time we actually have another M structure over here, right? I hope you guys can see that, and it also has a neckline at that level, and we can see that price actually attempted to go back to the neckline to create a test, but it seems as though at this point in time the neckline is failing in regards to actually holding price, right? So we may be, or rather we may see a situation where the market actually moves further up to grab the stop losses that are located just above that M structure. And that is because whenever we have these M structures, guys, remember what normally happens is that a lot of traders and investors usually sell on the second leg of that M, and they place their stop losses just above, right? So we have a lot of stop losses that are located in and around this region, and we may actually see a situation where price from where it is moves up to grab those stop losses and then moves further down, right? And this would give us a M structure, as you guys can see. And another reason that motivates for why I believe we need to see the market continue to move further down is that we have a candlestick over here, and it too is very much similar to those candlesticks that I spoke about on the bigger time frames, in that this one is actually a bearish candlestick with a very long lower wick and a relatively small body, right? So it tells us that at this level over here we have a lot of liquidity there, and as I said, guys, liquidity is actually money that needs to be triggered by the market at one point or another. So as I said, we may see a situation where the market gives us an M structure in this manner and then push up to grab this liquidity, and at this point we may then see the market start to move further up, as I said to you guys earlier, right? So what else do we see on the daily chart? At this point I really don't see much, but as I said, if I can just zoom in, myself personally, I would love to see the market actually hit up a bit to grab those stop losses and then give us this very nice M structure and then push further down to around the end of this candlestick to grab that liquidity. And once the market reaches those points, I believe that we should start to look for those potential buying opportunities, right? But ideally I would love to see it at this point in this level, and because that's more or less where this huge M structure started.